For those watching on the recording, it's March, what's the date? 24th, 15. Last week we had the FOMC. So a quick kind of recap of last week. They priced in the Fed not raising rates sooner rather than later. Bulls liked it in stocks. Last Wednesday, Fed released their statement and we rallied. And we've maintained that rally for the most part in 3 or 4 sessions after it. So what does that mean is that it's kind of got the market in pause mode, stock-wise, even in bonds. Currencies are moving, and I think we got a tag to what they're doing on an overall helicopter view of equities. But right now, you look at the S&Ps, they're trading in the mid-90s. They're comfortable. They're about 35, 40 points better than they were right before the FOMC statement. They rallied up to some contract highs and backed off 15 points. That's where we're at now. Tighter ranges the last couple sessions based on the market had some good volatility last week and is kind of just on kind of just hit the pause or the slow motion, and they're what do they say in piloting? Cruise. They're cruising altitude is a way to put it, these markets. So temper your expectations, right? If you're watching on recording, this won't be as relevant, but for you guys who are live, temper your expectations and not get looking for a profit you might have made in a 10-point move that you don't get in a 4-point range. There's a big difference between volatility and no volatility. Can you still pull money out of the market? Of course. But you could get stuck, chopped up, overtrade, have nothing to show for your efforts also if you don't adapt to market conditions changing. And 90% of people don't adapt as quick as they should. Simple things like, you could see kind of what's going on in the bond market. You could see the big knee-jerk reaction after the FOMC last week. Now we're in late month, end of the quarter mode. What's going to happen as we go to the end of could there be some window dressing at the end of Q1 next week, the last 2 days of the month, or next Monday, Tuesday, and then we get into April and we get into the next unemployment report. And the FOMC said they removed the word patience, but the market knew they were going to do that, so that wasn't a surprise. But Janet Yellen and a lot of the Fed speak during that, or in that statement, after that statement, was that post-summer would be the first rate rise 2015. Markets were a little nervous they could do it in April or they could do it in the midsummer meeting, but that's kind of taken off the table. That's why they maintained or sustained this rally since Wednesday. Does that mean we stay up and away? Obviously not, but on a more macro or a helicopter view, that's what's been going on this week, and keep it really simple. Now we get into this class, and this is going to be with George. George, some of you know George as co-hosting the room with me for several months, and some don't know a lot about George. But George, and I'll just give you a brief introduction, George has been trading since 2007. He's a diner owner of 3 diners in Michigan, and he has free time to trade, especially in the morning. He's been doing it since '08. Well, he's navigated through getting, his quote is, he's always got addicted to the suspense. He was able to trade big size, and he did. And he would have trouble taking profits when he'd get them and hold on to big trades or losers. Sometimes that would cost him more than it should have, especially winners turning to losers. A lot of that got helped with the room and just being able to talk through stuff, and never go broke taking profit is a slogan that he's been able to implement. He's not afraid to take trades. He's not afraid to take losers. That's why he's not afraid to put it on, take trades, and calling trades out in the room is something that, unless you've done it, you don't know how difficult it could be. And it helps grow a callus to taking risk and battling fear a little bit. But he's done a real good job at getting consistent, staying consistent with decent size. He's always incorporated the use of order flow. through the eyes of what's called the delta bars. And he's going to explain more about them and the uses of 5,000 and why that's not an arbitrary number. In a way that this is not the holy grail. This is not a red arrow, green arrow indicator, but a way to not only start to tell the story, but execute the story or get comfortable within the story. Okay, the story's still playing itself out. So think about this, as George is talking about, is building and reading a story with any setup, with any ability to create an opinion, execute an opinion. Is your ability to, is the story fitting to the theme, or is it now, you buy a book about how to fly a plane and you're talking about boats. Something's changed, right? So does it fit the story? I'm close to, and this is something that just thought of and I'll say, reaching out to another prop guy friend of mine, still with the firm that I was with, to see his willingness to come and share what he does. It would be helpful because I heard some of the things he said, and outstanding trader because he does it and does it with real big size. But anyhow, it's a logistical thing of getting a hold of him, and I think he would, because of the type of guy he is. But again, that's something that is down the road and it'll be really helpful to many of you guys. So with all that being said, I don't know if there's any other way more I can introduce you, George. I'm going to give him the controls and therefore the screen.
Hello.
All right, George. Sound good, by the way.
All right. I got the screen so Anthony can trade.
I just seen the NASDAQ fly out of bed. Hey, before you start, let me, all right, there you go. Sometimes it takes my screen a second to pop in your screen. I see it. I just want to make sure it's recording George's screen. It has to be. All right, so just to reiterate, we'll do Q&A, but let George kind of walk through his presentation, and then we'll do it at the end. How's that sound?
Yeah, that sounds good.
All right, George.
We're really leaking lower here. So, all right, one of these bars, a bar will not be completed unless it's 5,000 more aggressive buyers than sellers. That means like 5,000 more contracts traded at the offer with the market order. And it's the opposite for when they're minus 5,000. So it's basically keeping track of market orders, but in a defined fashion somewhat. So here's the chart. Now, one of the things that I noticed was if I take this and I scrunch it up, you can kind of see that, a lot of these bars close at their high or their low. Like, ignore over here. This is like good data, all this. And what you end up getting out of it is, like a defined trend, right? So sometimes I could use them for momentum also. Like, let me change the color of this pen. You guys see how it's scrunched up, right? You just basically got like a smooth market, came down here, got, minus 5,000, minus 5,000, washed them out, came down here, you had minus 5,000, washed them out, and the market is basically doing this, right? And what you really got is a trend, right? And then here you had a trend going down till it broke it, right? So that's kind of like a simplistic way to be able to somewhat predict what a bar will do when it closes if it goes plus or minus 5,000 in the delta. Today's been, a little choppy, but even if you cut them in half, and you make them 2,500, if I do the same kind of thing, it shows a little more chop, and this is including overnight sessions, but generally when these things close, they close somewhere to the top of the candle or the bottom of the candle, depending on what the delta was in it. All right, so you can use it as a reinforcement. Now, one of the things that I like looking for is, all right, here's a good example. All right, let's say I kind of got a long bias, and I think this washout happened, and I think this market's going to come up back higher. All right, now if we start trading, and I'm watching this candle body right here, if we start trading up in here, and this happens to be a good minus 4 or 20, like anywhere from like 1,500 to like 4,000. If it's like 4,000, I'm extremely confident. If it's 1,500, I'm kind of poking at it. But what I'm looking for is for all these aggressive sellers that sold it down here to end up getting emotional and stopped out. And what helps me stay in is, if this stayed as a positive candle and I got the sellers baked in this bar, at some point there's going to be pressure on them because, a certain amount of them could be short-term traders that are looking to profit, real soon. And if they're not profiting real soon, they're going to jump out of their positions. And then depending on the context too, like let's say this actual bar, starts to crawl up, and it is minus 4,000, and we crawl up here and it starts turning into a positive candle. I also got all the sellers that are from up in here too, that are in this market that might be wanting to take some profits, which would push it back higher. Now, it doesn't work all the time, but, it helps me, it helps get some probabilities in your favor. And when you combine it with everything, it could be very helpful and help you stay in a trade. Let's go through and scroll back here and look at how some of them worked as like a big footprint. Let's see if we could catch something. Find I also like to use the POCs on these things. I mean, I'll scroll back and show you, like here you had a POC that ended up being a low, right? And here you had a POC that ended up being a low test. And then here you had one right here that ended up being the high test at the time. I'm just gonna, I guess, keep pointing out stuff that I have seen. Here's another POC test. Like let's say you wanted to buy it against here. The market pulled back to it. Maybe you got in, and then on this bar beforehand, you got that many sellers. And I'm not sure how this bar developed, but when it started trading up here, this actual bar might have been, minus 2,000 or 2,500. So, I had possibly 7,500 aggressive sellers, and this started creeping up on them, and then you ran higher. It works the same way in a downtrending market too.
Hey, you know what? One thing to add is to keep the simplicity in mind. Like, is there enough fuel? It's just like, you're driving. Do I have enough gas in the tank to get to the next gas station? So you're long. Is there enough sellers baked in that would provide the buyers to get us to go up? That's another way of staying into a trade or almost solidifying direction by your prediction being up. Well, what you need to go up is more buyers who either try to buy the market or do buy the market and get it to go up. I just want to add that. Sorry. Go ahead.
Yeah, I mean, really, that's really what it is. Now, this market right now, actually, right at this moment, all right, we got a decent example. All right, so let's say I want to sell it at right here. I got baked in aggressive buyers, and they haven't gotten it able to go higher. But you can see it happening right now because this is a down candle, right? So, let's say I sold 93.5, right, and then your risk might be, to maybe a tick above the high at the time, because I got baked in aggressive buyers, and they can't even get this candle to go up yet, So, I mean, if we sit here real time and watch how it develops, now you gotta take the context of where we came from too, into the day, where did we come from? But this is a decent a spot to look at, and what else is going on. Like right now, let's say I was bearish and I wanted to get short, I would start feeling uncomfortable because it's turning slightly a positive candle, and technically it's doing somewhat what it's supposed to be doing. And I'm watching the NASDAQ too bounce out of the hole. Now, one of the things that can happen is, let's say we get this skip higher, you run some of the short-term stops that, might be trailing the market, and we get real positive, and all of a sudden we get a skip lower, and it turns into a down candle. You know that you got the fuel, and these buyers right here to be able to run it through the lows, You gotta be on guard and watch how it develops. Right now they're struggling, they really are. You're plus 3,200, and we're kind of eyeing the low of the day at 90.5, and you really got almost enough aggressive buyers that if you start putting pressure on it and start going, like 92 3/4 offer, 92 half offer, these aggressive buyers might be the fuel that would be able to take it through the low. So let's just watch and see how develops like real time, because we actually have a divergence going on right now. Let's see what happens if it goes three-quarter offer, if it really picks up in momentum and you start washing out some of these longs, that are bottom feeding here, covering shorts aggressively or whatever. Let's see what happens, because we have baked in buyers right now.
Well, the other thing is something you say a lot, and I think a lot. You say it, and it's good you say it, and I think other people should think about what has to happen for something else to happen. Like, if it goes three even offer, these longs are dead. Something like that. If it just that last line of defense that the longs are leaning on. Now, we do it in the leans, those videos that we cut out, that we talked, I think that was last week's session. Like, if it goes, it's gone. And that's that lean kind of environment. Is there a price in here you think that the longs will puke if it goes off?
I think if it goes 275 offer, I think they're going to puke. And we do have longs in here. And we're close enough to today's low, too, which it could attempt to really test it.
There's a lot of volume that's been coming out, 93.25, 93.5. That's where...
Yeah, and, the evidence of it is, a lot of it was aggressive buying. And here we go. Let's see how this works out. You're starting to get to the bottom of this bar, and you still have positive delta. You can see kind of the momentum pick up in it when it went 275 offer.
Yeah, there's no doubt. There's no doubt. It went 2.5 offer, 2/4 offer. Now, two evens got 500. Let's see, 104 two evens traded. You guys watching this on your dome at the same time.
Everybody gets to see a real-time example of the divergence taking place. I mean, like, everybody that bought 3/2 is getting smoked right now,
They're either getting out or trying to get out. So you want them to try to get out.
This isn't even a negative delta yet, and we're about to touch the low of the day.
Yeah, it's another. There it goes. First negative, it went. The first time it went negative, even though it's been a down bar since 93.5.
And I mean, that was actually a decent trade setup. If you sold, on this delta here, if your bias was short anyway.
Well, here, if your bias was short, or you already were short, or if you gun to your head up or down, this is a good way to say down, and here's why. I think there's more fuel in stuck longs than stuck shorts. That's always the answer for why it went up or down. When we were trading 93F, it went down because there was just more stuck longs than stuck shorts that particular moment. It's usually always the answer. Sure, we could go down because some big seller comes in, starts pushing it, and that happens, but that's also an element of longs being stuck too.
Yeah. I mean, they pretty much stuffed the 3/2 buyers. I mean, they're in trouble, really. It's going to take some serious effort for them to get it back to 3/2 right now. That's the way I'm reading this bar right now. I mean, it doesn't mean it won't happen. Maybe there's not enough fuel, not enough people stock or not enough sellers to get it to break through the lows, or too many people trying to buy it. But that transition right there, using this delta bar, would have profited you at least 2 ticks. That little divergence, that little instance. If I'm extremely bearish, well, my key right now is, as long as this market stays below 94, I'm in good shape, and if it's below 94 right now, I'm all right. If I'm thinking that it's going to go to 86 or whatever. Now the battle is to, um, you know, just watching the way that this is developing. Um, the Bears are trying to keep it below 93.5, and then you got Bulls trying to get it back there. You know, because the majority of the activity, you know, took place at 93.5, and that's where the battle happened. That was, you know, a perfect. We got lucky and saw one happening live.
Did you go over
Uh,
where you came to the 5,000 number? Did you talk about that? You might have.
I seen like, geez, probably like 2006, 2007, like an example of a Delta bar, you know, on the Market Delta website. I'm like, wow, what's this? And I started messing with it. Um, One of the ones, if you put your periodicity on 5,000 delta, one of the standard ones I think is, if you put it on delta on a periodicity chart, one of the standard ones is 5,000, you know, and then I've seen like extremely volatile times and not volatile times, and you know, I have the experience to be able to adjust to it. Now, if the market's very, very volatile, it's good to like cut it in half to 2,500. But for the most part, I like the 5,000 because you get a bigger buildup of what's happening than you would in 2,500 one, because like 2,500 one right now probably already had like at least one bar on that little washout that went minus 2,500. I'll switch it and you can see, yeah, there you go. You had the minus 2,500 and now this one's digging back up. And I mean, actually, if you're watching the 2,500 one and you're watching the POCs, you can really see where the battle took place. You know, you had some buyers, they got it to go up a couple ticks. When you went 275 offer, you had the little washout. And now, you know, right here is the line in the sand. Right here, 93.5. I'll draw it thicker and thicker and thicker. You know, the Bears might bail, you know, over 93.25, 93.5. The Bulls that are long from there, you know, are trying to scratch it. So let's see what happens. I even drew like this thick because it's a very important price right now. Now let's say you get over the 93.5. Well, where would be the next logical spot this market could get to? Well, maybe here, right? So if you want to buy the momentum through it, you know, you might look to exit, you know, 95.25, 95 even. But so far they haven't been able to get it through it. We're watching the battle take place real time. Now let me switch it back to the 5,000. We still got the divergence going on, you know, as we jumped up a little bit off the recent low. But, you know, we're slightly positive delta, and it's still a down candle.
So let me answer or ask Juan's question, if you don't mind, George.
Yeah, let's do some questions right now.
So once the delta got to neutral, and we were trading 91.75, I think it went from minus, or sorry, it was plus 2,600, got to neutral or zero, he says, but didn't follow through the minus 5,000. Does that mean not to hold the bearish bias?
It depends. No, I mean, you got your bias beforehand. This is just like a confirmation. You know?
Right. That's exactly what I was going to say, is that your bias, the execution is come and gone. The bias was when it was up at 93.5, what could happen. Now, it did follow through in my eyes. Anytime it breaks 2 points, that's a good move to now, as far as to keep a bearish bias, you need it to hold below 93.5. If you look at the rotations, it just went there, stopped, and came down. Does that fit into what your answer
Yep.
would be?
Yeah. I mean, if I was like, oh, we're gonna touch that single that I talked about, you know, and I'm short and I got something left, uh, I just want to see this markets, stay below 93.5, and I mean, really, if you want to give it some room to breathe, the logical place using this chart is above right here. Right here. That's where your stop would be.
Bob asks if the downloaded one he got, it has a pivot point of 94.5. Do you use the pivot?
No, I don't. That's just some extra malarkey on it. I like the POCs and the candles and the delta.
Jill asks, does the strength of the color of the 5,000 have any significance? Some are light colors.
Sometimes it does. I mean, sometimes, I'm like, oh, this bar for sure is going to go minus 5,000, and then while it's doing that, it gets kind of like white hot, like, like these screens like pop up in this bar, and then you're like, oh, I better cover,
So when it goes darker green for 5,000, like at the bottom, does that mean what? That it went?
It means that you got like some serious buyers.
Got it.
And it's time to consider, possibly exiting or whatever. I mean, we get to witness this real time. I mean, what a bonus.
There was another. Well, that was the other example. So when it got up around 93.25, it's potential resistance, and it went green again, but yet the bar was still red, or I mean the market was still not higher.
You built in some more bottom feeders that are about to get whacked right now, or possibly. I mean, you
now
never
if you
know.
look at a 4 PNF or 6 PNF, I bet you the bottom of the range is coming in at 91. I'm just visually looking at that. Let me see. Is it?
Let me switch this over. I could switch this over to.
Well, the 4 PNFs are kind of. Yeah, there's a previous low at 91.25, and now this one.
And the 93.5 being important price is not only on here, it's on here too. That's the big struggle for the bulls, is to get it to 93.5. And it really is a struggle if you're following the order flow and everything.
They have a swing low before at 90 whatever, right? That was from this morning, 90.50.
Yeah, this morning was 90.50. We attempted to tap that single print, but it took off and ran up to 21 or 20.50.
When you, George, someone's asking, do you look at when the price levels in the 5,000 candle was going down and were red, and then you start to notice them turning green as buying start coming in? When do you understand that question?
Yeah, I mean, yeah, it's buying coming in. So if I was short beforehand, I'd be concerned, and if I was trying to get long for whatever reason, I'd be happy about it. Because there's bigger buyers that are big enough to, give me a shade of green.
This is a helicopter approach. I mean, it gives you a sense of is there fuel in the tank to get us to the next target? And there still is, I think, right? I mean, the deltas, it's not plus that much. It's approaching.
No, not yet. Yep. I wouldn't be concerned if you're a bear, and you're short. I wouldn't be concerned till you got above 93.5. And then if you're now, did you see how that shade went right there? And it like got like whitish greenish. That's usually like and you can see it on here and the imbalance. You know, that's
Tempo.
usually like a little indicator of you know, you had a decent square to buy in right there. You know,
You still
now
got to hold these 93.50s. That's the name of the game. If they leaked out now, look at the 4P. Is that a 4 you have? So that's a 4P.
yeah, yep.
There are the third rotation. Put a number on the first rotation and the second rotation. The first rotation would be 42 by 0. Second rotation is 477 by 0. The third time would be if it rolls off this 95 half. This is a big moment because square to buying came in. Are they stuck or do the shorts puke above 93 half? If they walk back down to 91 half, they're going to have sell stops galore below there.
Yes.
Now, if
And
you've been short 93 half and hadn't taken any profits when twice it gave you 2 point profit, 2 point profit, that's not the market's fault. Go ahead, George. Sorry.
right now you can still see that you got some aggressive buyers, and this candle could be keeping you in. You know.
But this 1, 2, 3, 4, go get rid of those numbers real quick. Just so people seeing understand, might be the first time. The first rotation is 42 by 0. Then it goes up, then it goes down. The second rotation is 477 by 0. So it's every other
Oh,
bar.
okay. All right. Yeah.
Now we're walking up to 93 half. They stop on a dime and rotate. The Bears have an opportunity if they could score here. If you just think about watching a basketball game, if they can make a shot, they have a chance of taking out the 90-50s. They got to make a shot though, and the shot is pushing them through 92. Let me ask another question. It's Bob. He's beyond his 3-question max, but we'll let him get away with it. This is where you get the fading. That right. I mean, that's the to me the market has to be faded before you could ever be a trend trader. I think you have to be a fader first and then back into finding a trend, because any good trend trader is also a fader because they're buying the pullback off a rally. Now you got to include time of day. It's exactly midday. It's slow. Tempo is slow. Stories are taking a little longer to play out. Their buy stops now above 93 half and sell stops, but the sell stops are below 91 half. I would not stay short. I think that square to buying has a chance to find some shorts who are trying to be hogs. They have a chance to run them out and run them up 4 or 5 ticks. But I don't know if I'd still be short. If I caught the 93 Fs earlier, I'd be out for a profit on the whole thing. And I'd be either waiting. I wouldn't necessarily get long. It would just be, where did you get out of some profits? If you've been short before. Go ahead.
I mean, like I said before, one approach to trying to stay short would be, you know, to have your stop above here. You know, I mean, that's not the way I trade, okay? But, you know, somebody that isn't, you know, they want to be short, well, where's your risk at? Well, it's right here, you know. And then, you know, this can keep you in too because you're still a negative candle. This won't be a positive candle till it trades. It won't be an unchanged candle till it trades 94. You know, and you're still building in some bottom feeders. You know, which that story could play out, run it through the lows, trap them real good, and so on. Now you got to take everything else into consideration. You know what's happening too. The Nasdaq's starting to bounce. You know, maybe you got a lot of people that were chasing new lows kind of trapped. So kind of the pivot right now is like 94, 94 quarter. 93 half is if you're, a short-term trader and looking to scale. You possibly could buy above 93 half, right? And sell it into the 94 quarters as they run the stops. Or short below 93 half or 93 half with your stop at like 94 half. Really both scenarios could work out. To me, this would be like a 50-50. I'm still leaning a little bearish because I like how there's some trap buyers still in here. The bonds are on their highs too, so that would kind of keep me a little bearish still.
I'm not very patient. I wouldn't be comfortable being short of 93.7. That's where I would have a mental stop. 93.75, 94 even. That's what I would do if I was short. And I better have taken profits on those two rotations to 91.
Yeah. Well, here's another way of looking at it is, well, if I sold 93 quarter, 93 half, even right now, okay, my risk is to 94 half. My profit potential is, if I'm looking to play in front of the single print, is 89.75. So, risk reward kind of plays out properly too, right? And all we need is another, I'd say right now, 275 offer again. It's almost the same exact trade. And, let's watch this play out real time, Well, I tried to go 275 offer and went quickly bid again. If I was short, I don't know. I would have liked it. It depends, how strongly I felt about it, But I know I got to get out here. I have to. This is where I'm out. Come to terms with the loss.
Well, kept you in. Now, I didn't have an opinion to get long above 93 half. You just have to be really careful staying short above there. Now, any horns you might have had, knock them off. Their sell stops below 91 quarter. That starts to set up the momentum. Then you look at the delta bar George is looking at, and it's still 1,000 positive. There's still some meat on the bone.
All these guys that bought, the aggressive buyers in here are sweating, man.
They can't get it above there. They can't get it above. But now you could see why the roadmap is lined out that way, and the top of consolidation is marked at 93F. It should be less random to people as to where bottoms and tops of consolidations form. They're going to blast through this. You're going to see a red, all the way to 90 through 90.50, and then we'll find some downside targets in the 80s. This is really good how it just fit into your demonstration. That was like
yeah, right. It was perfect timing.
Perfect timing. I called all the traders I knew, and we orchestrated the market to do it.
We could do some more questions. See, I think, one of the problems is, like, people don't get too scientific about it. It's like, what's happening at that moment? And, and then adjust. The only scientific thing you should have is, like, this is where I need to get out,
Yeah, your exit, yeah. Know where you're going to get out before you get in. Be a little scientific about that. Where are you wrong at? Where am I wrong?
It sucks to take the loss, but that's the smart thing to do when it just doesn't work.
It's the only thing to do. Yeah. You don't know you're wrong unless you know where you're wrong, period. Yeah, how many people are married and you get into a fight and nobody admits that they're wrong, and the fight goes on a lot longer than it should because nobody knew where they were wrong at. You know, I always say there's a sweet spot for everything. Sweet spot in the size you should trade, the risk you should take, the rewards you should take, and questions. If there are too many questions, then people aren't getting it. If there are too few questions, people aren't interested. But there's just the right amount of questions based on me doing these webinars in the past, not just the class webinars, but the, webinars I've done for Market Delta a ton in the past. If there's too many questions, nobody gets it. If there's no questions, nobody cares about it. But when there's a good sweet spot of questions, it's clicking. And that's what there is. So here's what needs to happen. You can't sell this thing as it approaches 91 that time. Now it's got a leg up. The next time down, because the rubber band would have been too stretched from 93.5 to 91.5 to sell it on midday, especially midday, trying to make a momentum trade. You need a couple rotations to tackle 91 even. And then you could maybe take a momentum trade through the lows.
Yeah. Yeah, time of the day is important. I mean, you kind of put everything all together, in a moment, and um, take the shot and be prepared where you're going to get out. And
What would you say is a good delta number for the bonds? You ever look at those?
yeah, I mean, I trade them using them. Right now, I got them at 1,500.
All right, so that's Dan's question, and that's a good question.
Here's a bond one.
They're recorded or not, just so you know.
So, all right, here's a bond trade. All right. Well, I could use this as an exit because you're thin on the way up, right? And then there's no divergence or anything going on. So that wouldn't necessarily get me in. But, you could kind of try to time a bond short, cover 27 with S&P breakout above 93.5. It's just a trade idea. And the way that this is useful, this delta chart at this instance, is because this squirt higher, and then not that much traded up here. A lot of the activities there. If you go 65 offer, you might get some people that want to take a couple profits in the bonds, being up a full point and all. That's how you build a story too. If I was short 93.5, I wouldn't feel very comfortable with where we're at. If I match it with the rotations and then these shades right here, it's buyers keep coming back. When they start trading here, though, you might get some good surprise upside too. It's not out of the question, to trade in 95.75 because you got everybody short no fireworks happened, uh, and those buyers just consistently kept buying it, and that's why they kept this delta slightly positive. You know, they're like, oh, you want to sell it to us lower? We'll buy it lower. You want to sell it to us even lower? We'll buy it lower. Oh, now you're going to buy it higher. You know, that's kind of what's going on, you know. Uh, right now you're at the important part. Um, you know, when the day grinds on and it's real dead time too, you know, don't pay attention to anything. Take a break, go eat something, you know.
Ken asks, George, you said you look for certain things when you bottom feed. Could you show what you are looking for? Talk about it. Or did you just answer that?
Uh, bottom or top feed. All right, when I bottom feed, number one, the fundamentals got to be the right thing. Okay. I'll give you guys a good example in the Australian dollar, but vice versa. All right, the fundamentals is that the dollar is supposed to be stronger. So if I find something like on the market profile, like a naked POC or single print, and it's coming up against the fundamentals, you know, like technically what you're supposed to do when the fundamentals, you know, are in supportive of a stronger dollar, when you get like anomalies like a very strong Australian dollar or a very strong euro currency, I start, you know, this trade, me selling the Australian dollar, started yesterday, okay? It started because it caught my eye. I'm like, oh, they're not supposed to go up. The dollar's supposed to be stronger, right? So I start, you know, poking at it, you know, and I keep my eye on it, and then I'm like, oh, wow, up here I got a naked single print from a long time ago. Well, even more, I got naked TPO POC and volume POC. So that's kind of like the first ideas of it, and then I'll start poking at it, you know. I'll get in one, and then I'll add a couple, and then I'll add a few more, and then I'll add a few more. I'll add a few more, and then I give it room, you know, like I probably would have exited out here, but I know that if I get it going my way, I'm in good shape because I'm with the fundamentals and I got important levels. And how do they end up being important? Because if I scroll this chart up or down, you won't find too many naked POCs or single prints. They usually get touched at some point. One of the most defying things that will come close and not touch them is the S&P. That's what I've noticed throughout my career. Like today's a great example. I mean, it hasn't touched it yet, but if you're gunning for it, you know, the 89.5, you know, it still could be a good trade, but you've taken nothing but heat because the lowest it got was 90.5. You know what I mean?
Let me stop you there,
Let me
George.
give you a bottom.
Go ahead. You want to do the bottom feed example? Go ahead.
Yeah, I'll do a bottom feeding one. We'll pull up the S&P profile. See, everybody likes to try to make stuff more complicated, but it's really not that complicated. You know, people make it complicated because it's a very emotional business. Okay? So then they're like, well, I must be doing something wrong. You know, I don't know this or I don't know that. I mean, the stuff's simple. Either it will go up or it will go down. If you're on the wrong side, you will lose. If you're on the right side, you will make money. So what do you have control over? What you will lose. That's it. You can control what you make too, okay? You never go broke taking a profit. All right, let's find a good bottom feeder opportunity. Fed day. Or let's find a. Okay, I guess this will be a nice one right here. In here, I mean, anywhere in here, right? Because I'm going with the fundamentals. You're supposed to be buying stocks. It's just a blip in the system. It stopped perfectly at the 200%. Well, sometimes you don't want to miss it, right? So maybe you buy something here, and then you buy something here, and then you might take a little heat, but if it's the bottom, like let's say your stop's down here, you're in good shape. Sometimes, they keep going down, and you stop out and you lose. You might lose the 12 ticks. This is a good example of bottom feeding. This was the low, this is where it closed. Sometimes, you don't get exactly to the 200% extension, you fall short. Well, you want to get something, and then you take a little heat, and then you're like, well, okay, I'll buy this. Maybe you've seen a big bid in the book or something, and then, where's my ultimate exit? How much am I comfortable losing? Well, when you come to terms with that, you're all right. And then if you don't lose and it gets above your price, the low might be in, and, the sky's the limit.
Price will always be the first thing. Here's these sell stops on this next rotation coming out. Couldn't get through 93.5. They're coming and taking the lows out. Put your Delta bar back on.
Yeah, perfect.
So Brad asks a good question. The Delta bar, once it comes up, only 69 traded at the top of it. Does that make you more bearish? And maybe if you put it up, I could see what he's asking. So only 0 times 69. Does that matter at all or no?
It matters on the risk price because it gives me a true risk price because they couldn't even get this to trade a couple hundred, right? So my risk should be here because that's the recent swing high. Does that make sense? Man. Okay, we hit this, and we got some stuff below here.
Well, that's the whole thing. This next rotation, that would just you can't keep hopping on the ice without going through.
And what happened here? Now it's doing what it's supposed to be doing.
Price is lower, Delta's lower.
And what we were fishing for, keeping our risk here and having a short bias possibly was for this to happen and get this minus 5,000.
It's going to be it's going to close minus 5 or plus 5. Where's price going to be when it does?
Exactly? Yep.
Now, this is good stuff. So I'm going to wrap it up here. George, thanks again for doing this and doing it on shorter notice than you expected. We appreciate it. And just to wrap up everything, don't forget, if you're not a trading room guy, and you want George's chart definition for this plus minus 5,000, email me. If you are, it's one of the charts at the bottom of the resource page, and I redid the links so that they all work. So
All
you
right.
don't have to build it if you're a chart guy. But thanks
What
again,
are we
George.
accepting? Australian, Euro.
For what? For questions?
Yeah.
That's for Bob. We're going to accept, well,
You know what's funny? I even there's a Outback Steakhouse close to my house here, and last night I was hungry, and I even ate at Outback Steakhouse, being prepared to trade the Australian currency.
you know, it's funny about the Outback. We're talking about restaurants now as we're making lows, but the first couple that came out was in Florida, and they were actually really good. Once they got bigger, expanded, they became more of a fast food steak joint. Plus, you're a diner guy, so you have a bias.
Yeah.
All right, George. Thanks again, guys. Have a safe week. We'll see you tomorrow if you're in the room. We'll see you next week if you're not. This will be recorded. Give me a day to post it.